Hello there, Maverick Traders. This is Rob Reinhold, and it is the trading room. We just finished off the month of June, so we had monthly June options expiration. So we will be doing accounting on Monday, cutting checks and sending out distributions on Tuesday, and level advancements on Wednesday. Let's get into it. In this session, we're going to be talking about what happened this week, going over some of the news. We're going to take a look at these markets, and every week we like to forget everything we knew last week and literally look at it with a brand new slate with no biases, just looking at the data and at the charts. We're going to score everything from +3 to -3, and that's going to tell us where to make our best trades for the sector analysis.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
So last week we had some strength in the very first part of the week, and we saw the S&P and NASDAQ reach all-time highs, but then we had a pullback Thursday and Friday after the Juneteenth holiday on Wednesday. So it was still an up week, but just a very mild up week, mostly flat. We're going to take a look under the surface because I've been using the term soggy, that the market was soggy, and that yes, we had some of the semiconductor AI companies doing really great, but the rest of the market was soggy. This week was the exact opposite, where we saw this big reversal in semiconductor and AI stocks on Thursday, but what we saw pretty much the rest of the market, they went up those days. So as the indices came down because of these huge companies, we actually saw 70% up days on days when the indices were down. We are seeing that the market is anticipating a rate cut. The Fed has told us there's going to be one rate cut this year, and right now the odds are 68% chance by September. So that's what the markets are saying. I think we're going to get it. I'm very surprised that the markets are not pricing in a July rate cut, because I personally think that the Fed is going to try to avoid looking political, and they want to cut rates well ahead of the election. I think it's September. I think it's going to be seen as a political move, and I think they want no part of that. However, the market is not showing that there's going to be a July rate cut. Just a little surprising to me. Let's take a look at the economic news last week. We got retail sales. Retail sales were weaker than expected. I just want to go through quickly the numbers. None of these numbers mean anything, but I just want to show you how much of a mixed bag right now the economic numbers are. Empire manufacturing, better than expecting. Retail sales, worse than expected. Industrial production, better than expected. Unemployment claims, middle of the road. Building permits, weaker than expected. Flash services, better than expected. Existing home sales, better than expected. As you can see here, we're getting this mixed bag. Now, I know that typically we like to see all of these things, with really strong signals if we want to see a good bull market. And on the flip side, if we want to see a really good strong bear market, we want all these to go negative. So right now they're like half and half. And I know a lot of people are saying that's not good. It's actually exactly what the market wants. Not too hot, not too cold, just right. It's the Goldilocks economy. So let's take a look and see what the markets did this week. Let's check in on the numbers. You can see the Dow had a great week. That's really because Boeing finally found a little bit of a floor. But really S&P barely up. The Q's even less. The NASDAQ or the Russell hardly up less than 1%. This is just, again, we had strong up days in the first part of the week, pullback later part in the week. It's not really telling anything major. But if we look at these charts, I really want to point out that what we typically see is a run and then some sort of pullback or base. Now here we got more of a base with maybe a little bit of a pullback mixed in. And then we got another expansion. And then of course, what do we get? We're very highly likely, now that we've made a new high, we're probably in for another base or pullback or something like that. The first place I'm looking is this 54.60, which you can see ended up being a little bit of support these 2 days. If we break up below that, then I think the next line is going to be to this 5400. And then if we go below that, you can see that we've got a 20-period moving average, probably around 53.70. As you can see, there's a lot of support over the next 1 or 2%. And ultimately, we could go all the way down to the 50-day moving average, all the way down here to 52.50. This is a bull market. I've been saying that for a very long time. I've been trying to beat it through people's heads that are bearish. Look, you can be bearish. You can feel bearish. You can sit and talk with all your buddies about how bad it is and how terrible the economy is. But guess what? The stock market's going up. You can actually have both beliefs. You can believe that the economy is bad and that the stock market is going up. Trade the charts. Do not trade your opinion, because your opinion is full of all of the biases that you have in your life. It's full of all your political stuff, all of your spiritual stuff. It's all very confusing. When you look at the charts, it's telling you what's happened. Hey, we made a new swing high and we had a big run into it. So what do we expect to happen? Pullbacks or bases. It is not rocket science here. Pullbacks or bases. Okay, we're going to get a pullback. Where are we going to get a pullback to? No one knows, but we know at some point, if this bull market is going to continue, there's going to be a buying point, and that's just what you're waiting for. This is a bull market. And look, I know, like I said, when bull markets keep going and going and going, people doubt them. I've been trading for over 27 years now. I was a bear. I was a total bear my first couple of years. I never believed the market was ever going to go higher. And it crushed me because I was trying to short it. Then I was like, okay, well, I'm not going to short it, but I can't join in the party. I don't want to be like idiots over here. Well, guess what? Those idiots were the people making a bunch of money. And I finally decided, you know what? I can be pessimistic and still go long. And that's what I learned how to do is I can argue the bearish case as better as anyone. But guess what? My trades are going to be what the market says, and it is bullish. Last week, as I talked about, we got this pullback in semiconductors. Now look, that's a big chunk of the market. You take the semiconductors, you take Apple. Okay, that is like 25% of the market there. Look at the rest of this market. Mostly green. So we went from having a soggy market with a couple of shining stars to a couple falling stars and a really shining market underneath. So going forward, look, you can't be anything but bullish. You just can't. Yes, there's going to be pullbacks. Yes, there's going to be bases. And look, there might be a trend change in here where we go bearish. We won't know that until the chart tells us. The markets seem really happy here with bond yields at 4.2% and economic data, which is good, not great, which is great for the economy. What happens in these kind of markets when you've already had a big run, everyone's already bullish, but yet there's no reason to sell? Well, you get a slow grinding market higher, and then you get a few nasty pullbacks. Now, typically, I save this speech for August because August trading is typically very low volatility, very slow, and then you get this grind higher, and then you get like two big red candles. And that is the buying opportunity. Those are the opportunities to add into your bulls when you get those red candles. So I think that's exactly where we are. I think you just want to be having some capital on the sideline. If we get pullbacks, I think you want to be putting them to work on the bull side. Next week, there is not a lot on the calendar. I don't think there's really anything to talk about other than core PCE price index. And take a look at those estimates, 0.1%. This is the Fed's preferred indicator for inflation, 0.1 month over month. Even if it comes in at 0.2, it's good news. Only if it comes in at 0.3 or greater is it going to shake these markets. And I think people are going to look at that and say, well, that is a statistical aberration. That's not what the data has said recently. We'll ignore it until the next one. I just don't see anything that's going to knock this market down here. When we look at the score, It's a clear +3. This is a +3 market. We are probably in a little bit of a pullback or a base here, but this is where you want to have the capital available. When we pull back, when we get a couple of red candles, then you start to take your bullish positions and start to trim some of your bulls as we run higher off of the next move. Let's go in and take a look at all the sectors and score them +3 to -3. Last week, consumer was the best. Now, I turned bullish on consumer about 2 weeks ago, and it's because it went from the worst sector to the best. And we talked about momentum. When something has been really good for a long time, you can stay bullish that, but it's not going to have the kind of velocity that something that's been really ugly lately, and then all of a sudden, everyone rushes into it. You're going to see a lot more upside on those kind of market moves. So consumer, I think, looks great. It looks fantastic. Financials, industrials, they improved. They looked pretty terrible last week or 2 weeks ago, and then we're back now to zeros and +1s. Energy had a big move up, but we'll take a look at the chart. It's still one of the weakest sectors out there. And utilities, that was the strongest sector back in April and May. It's definitely giving back some of its recent gains. Let's go through these all one by one, score them from +3 to -3 based on our moving averages. Here we have a stock right between its moving average. This is the XLU, Utilities ETF. We're above the 50, below the 20, and one line is sloping up, one line is sloping down. That is a 0 on utilities. Communication services was a +3 last week. It stays a +3. A really nice move here off of this little bit of consolidation. We got this little bit of consolidation at the 20-day moving average. Friday breaking out. All we need to see is a higher high out of that breakout. I think we can get a nice run in communication services. +3. Coming over to real estate. Real estate gets a mild bump up from a 0 to a +1. But I do want to point out these candles. Remember, we had 2 down days in the market this week. Take a look at these candles. Gap downs and ran higher. There are no red candles here. There are down days, but there's no red candles. Like, this was a down day, but it's because it gapped down and people came in and bought it. These are very bullish candles, but look, moving averages are flat. I really can't get too excited about this until we get some actual higher price action. So +1 on real estate. Healthcare was a +2 last week. And again, take a look at these candles. Yes, we got a pullback, but they're all green candles. Gap down, close higher. Gap down, close higher. Gap down, close higher. Again, these are all just super, super bullish candles. We can't go to a +3 yet until we get those moving averages turning up. So this is a +2, but I think this is going to turn into a +3 pretty quickly here on real estate. Coming over here to industrials. This is where industrials and financials both recovered nicely. Last week, they were looking grim. They were looking really grim, and you can see that they put in a bottom, and now we're just up to moving averages, so we're going to give that a 0. Financials was ugly last week. Recovered, had nice big green candles. Closed a little bit above the moving averages, so we're going to give that a nod to a +1, so slightly bullish, not all that bullish, but just slightly. And then we get into the real strong ones. So here we have consumer. Consumer comes out, breaks out, holds that. Look at that. Beautiful candles to the upside. Nice breakout on Friday. This is my favorite sector at the moment, the consumer sector. Now, people are going to say, Rob, retail sales were weak. Yeah, I know. And guess what? I don't care. The market is buying consumer stocks. Could they stop tomorrow? Sure. But right now, they're buying them, even though retail sales are weak. This is where, again, we get this data in, and you've got to process it the right way. Just because the retail sales came in weak, we should have seen consumer sell off. The fact that it didn't is a screaming signal to me that it doesn't care. It wants to go higher and is looking through that report. Technology, look, technology had a great run. And again, this is just a monster run. We got our doji, we got our confirmation candles to the downside. Likely to have a pullback. Not anything big, Not anything big. So if you are looking to add on to technology, maybe you wait a couple days until we get that turnaround in tech. But tech is a solid +3. Materials was a -2 last week, stays at a -2. Don't get too bearish on this. Look at these candles. These candles were gap downs, run higher most of the week. Even though, look, it looks not all that great on a chart below moving averages, but the candles weren't telling you that there was any real selling this week. So yes, -2, but I don't think you want to get too bearish in this sector. And here we have the worst sector. We have the energy sector, and you can see we've got a pretty clear downtrend here, and we just got a rally up to the downtrend line, and we got a red candle on Friday. To me, this is the best sector to look for shorts. There's no question about it that the energy sector is the best sector. Now it is a -2 as well, but remember, materials was like a flat -2. This is just made a new low, rallied up to a resistance area, -2. We're definitely giving a nod to that one. If we take a look at the movement this week, we got an upgrade from real estate, and I think that real estate's going to go even more. Industrials and financials recovered, but look, they're not great. They just aren't negative anymore. And then we saw energy got bumped up a little bit. We still like energy the best as a short, and consumer is joining tech and comm services as the strongest sector out there. This is where you want to be overweight in the bullish side. Last week we had some trades roll off, so this is where we currently sit. We currently sit at 2 +2 trades, 2 zeros, and 2 -1s. So we want to fill some slots. We are at a +3. There's no question we're at a +3. So our +3 allocation is we can have up to 2 very, very bullish trades at a +3. Very bullish. We can have up to 4 trades at a +2, moderately bullish. We can have up 3 trades at +1. So again, we're going to look to fill those slots. So this week, if you take a look at the slots we had available, we don't have anything in utilities. But remember, utilities is sort of difficult, both utilities and real estate. A lot of the stocks in these sectors do not have weekly options. We just closed up the June options expiration cycle, so you would have to go out like 4 weeks. Or is this 5 weeks? No, this is a 4-week option one. 4 weeks is a little too long for me. I don't like to do 4-week trades. So I'm just going to leave that one empty. I'll look to fill that next week when I can do a 3-week trade. We've got a real estate trade that will roll off next week. We'll also fill that with the July monthly option. But we're going to be filling our comm services. We love this sector at a +3. We've got industrials that should say at a 0. But again, we want to be +1 in industrials. We're going to add to consumer. So we already have a +2. We're going to add to that. We also like tech, but it's not exploding at the moment. It's pulling back, where comm services and consumer are moving higher at the moment. We're going to add a +1 to that sector. And then we're going to go ahead and take that energy sector and add our most bearish play. Again, we can only have one moderately bearish play in this allocation, so we will fill that with an energy stock. All right, let's go and take a look at some of the potential trades you could use to fill those slots.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Comm services is my second favorite sector. And here we have Zillow. Now look, Zillow technically goes in comm services. Sometimes I play it for real estate. But look, we're going to use it to play in comm services. Here's what I love about this trade. If we take a look back here, this is the really bad news that hit Zillow about the real estate commissions, how they can no longer pay out real estate commissions, and everyone freaked out about Zillow's business model. And you can see that the freak out is pretty much over. Freak out is pretty much over, and now we have a stock that is now definitely looking to go more up than down. The big question is, can it get back to where it was before? It sure looks like it wants to. After stair-stepping lower, we're now sitting here with a nice high base, and it's just hanging out at the top of that base at 49. I think it's ready to make a run higher. Now we're looking to do a +3 trade. So a +3 trade would be something like this. A July 12th 50-53. So again, all the way up to 53. This would be the most bullish trade that I could make, is a 50-53 bull call spread. If someone wanted to just go and buy long calls in a +3 market, long calls can be an acceptable play. I only like to play long calls and long puts in +3 and +2 or -3 and -2 markets. If you want to be less bullish than that, look, there's plenty of options. They've got plenty of strikes, plenty of expiration dates. You can take a look at the 48-51, not as bullish, or you can even look at something more of a credit, where again, you're the 47-50 or the 47-50, where now it just has to basically go up above 50 and you're going to get your max gain. Let's move on to our next sector, which was in industrials. Remember, we wanted to do a +1 in industrials. When we were doing the Trading Collective, I went through the process where I looked for the right trade. Most people start with a bottom-up approach where they just go and say, oh, I'm going to trade Microsoft or I'm going to trade Tesla. And they don't see all the underlying currents, and it's not even the right trade for what they're looking for. So what we like to do is we like to say, hey, we want a +1 trade. Now look, a +1 trade, I'm going to make a +1 trade, and it has zero chance of making a lot of money. That's the nature of this +1 trade. And in fact, I don't want something with a lot of volatility. That's just going to give me heartburn. I want to find something really boring that looks really strong, and it doesn't really need to move higher. It just needs to not go down. So this is 3M. And again, look at these last candles. Last 5 candles look absolutely beautiful as far as gap down and close higher, gap down and closed higher. There are people out here buying it. Is it going to break out? Because we do have like an ascending triangle pattern forming here. You know, are we going to break out of these levels? I don't know. I don't care. I didn't pick this because I think this thing's going to break out and run to 115. I picked this because I'm looking for a +1 trade, and I just need it to go hold above 103. As long as it holds above 103, I get a max gain on it. I'm not looking for it to run. And if it does plunge below 100 for some reason, then we've got our max risk in play. So this is a +1 trade in the industrial sector, 3M. Moving on to consumer. This is my favorite sector here. So I am looking for something with some upside. I am looking for something that has a lot of pep. Since I'm looking for something with a lot of upside, now I'm looking for, okay, what stocks out there are really ready to go? Now, VF Corp, if you take a look at this stock has been really bad lately. And in fact, I actually took this stock on a short off of this bounce right here. Now, I love these. I call them the March of Death stocks because they keep going lower and lower and lower and lower. And every time they have a 20% pop, you just short them and they just fall back down. Well, guess what? This one didn't do it. This one didn't fall back down. And when I was going through my scanner, this one came back up in front of me and I said, hey, you know what? It looks like it's going up now. This is something I hope everyone is able to develop. Literally like 2.5, 3 weeks ago, I took a bearish trade on this. I was bearish. And again, I had my reasons for it. It came up as a long. My last trade that I made, it's over. It's done. I have no baggage. I don't take any baggage anymore to trades where I used to. I used to be like, well, I just shorted it. I can't go long now. because that's admitting that my analysis was wrong. Yeah, exactly. The analysis was wrong. This just has a really nice pattern here, a really nice breakout. So if you want to play this less aggressive, that's great, but I'm looking at this June 12th, 14 to 16. So it's going to be way up here. I'm looking for a substantial run in this VF Corp. They did get some news. I didn't think the news was going to matter that they got a new CEO, but apparently Wall Street really likes it and thinks that they are going to turn this stock around. If you want to do less bullish trades, there's some on the board there. You can take a look at them. All right, let's move into tech. Remember, we are doing a +1 in tech. We're saying, hey, again, we don't need anything like VF that's going to take off and run, hopefully. We're just looking for something that doesn't go down, and Microsoft is telling us it does not want to go down. Now look, I did not start off with, oh, it's technology. I want to trade Microsoft. I want to trade NVIDIA. No, that is bottom up. And that's you're doing it the wrong way. I got here because I said I want to add a +1 in technology. So I'm looking for something less volatile. I'm looking for a more stable, less volatile trade. And I'm looking for something that is going to hold its price of where it is and go a little bit higher. I went through all of the charts and I said, no, that one doesn't fit, that doesn't fit, that doesn't fit. And this chart fit. And then I looked at the ticker symbol and it was Microsoft. That's how you do this the right way, is you look for what your slot is saying and just find the stock that fits it. And then all of a sudden, that's the stock you're going to play. To me, this is just looking like it broke out here. It wants to hang out up here. It could pull back. But if this market stays mildly bullish here, there's no reason why we're not going to get this thing closing a little bit higher. And that's all I'm asking it to do. I'm asking it to go to 450. Right now, it closed at 449.78. If it just stays above 450, this is going to be a max gain for me on a +1 trade. And last, energy, we're going to load that up with a -2. So I want to find something that has some downside, has some oomph. Now, I don't have a longer term chart of this. You can pull this up, but this is YPF. And if you take a look at this, about 4 months ago, this was a $10 stock, and it ran to $24.50. That is a 145% return. There is some downside where we could give back some of the gains. You could see what it's done since it hit its top. It failed to make a new high. It then reached a new low, rallied, hit resistance there, broke down to a new low, rallied back up to previous resistance, and you can see hit that. So this is more of a bear rally, maybe a low base, but this is definitely looking like it could easily go down. We're not asking it to go down a ton. So my -2, sorry, that should say -2 trade, is a 21.19 put spread. 21.19 put spread is basically saying this is where we're looking for it. It needs to go below the bottom of that rectangle there. That's what we're asking for it to do. And if it goes above 21 and holds there, look, we'll take our maximum loss and we will just move our capital to the next one. If you want to share any trades with the rest of the Maverick group, you guys know where to go. Log into the Maverick members area, go to the forum, and let's get some discussions going on some trading. In conclusion, the broad market is bullish. Now, I've had mildly bullish there, and I've had a different... And for the last 2 weeks, I've been saying, yes, the markets are going higher, but it's soggy. The average stock isn't really going anywhere. It's all of the semiconductor AI. I actually think the semiconductor AI now is soggy, and the rest of the market has really firmed out and broadened out. I think that we are going to just grind higher here. And again, this is summer trading. I usually have this talk in August. But I think we are at a point in the market where we're likely going to get August style of moves, just to grind higher, 0.5%, 1/3%, and then we'll grind higher, and then something will happen, and one day we'll get a 1.5% sell-off, and then the next morning it'll open down 1%. Those are the points that if you have your capital and you're looking for some bullish trades, those are the best moments to add into the market. Look, I know it's a scary point when the market is down, but as long as you're out 3 weeks and the trend doesn't change, those are going to be wonderful entry points. And as always, look at your sectors, look at your industry groups. That's where you want to focus your best and worst trades. Everyone have a great weekend and be safe. Goodbye, everybody.